guys, Michelle Stock with Realty here. I am joining, I have Tammy Stowe joining us from Atlanta Bay Mortgage. She's going to be talking to us today about a couple of topics when it comes to lending, the buyer process, stuff like that. So the first video that we're going to do today is how to prepare financially when buying a home. So Tammy, if you don't mind, just go ahead and tell us a little bit about what a buyer could do to prepare when they're ready to purchase a home, whether it be they have low credit or they have a good credit score and kind of starting to save money. Tell us a little bit about that process and what it looks like.
I'll be happy to, Michelle. Thanks so much for having me today. One of the things that most folks really need to realize is what the bank is looking for right now is money that you have saved. For certain criteria, they will go back 4 months to show that a client has the capability of saving. So if you've gotten, stimulus money or you've gotten a gift from a parent, tax return money or things like that, that's great. It can be used for down payment, but the bank is looking for money that's known as reserves. And what those reserves are basically 2 months of your mortgage payment that we can show that you've saved for. So if you end January and you have a balance, they want to see February where that balance has grown, March where that balance has grown, to show that you have the capabilities of saving throughout, before you actually buy the home, and that you do have some money for reserves. The types of funds that you need, and a lot of it has to depend on how your contract is negotiated, but you have money for your down payment, then you have money that you have to have for it, and it's referred to as prepaids. That is money that's needed to set up your escrow account and to basically pay for your homeowner's insurance for a year up front. All of those items can be negotiated in the purchase of the contract, but you still want to make sure that you have enough funds in the bank when you start shopping for your home, because in today's market, a lot of times it's more difficult now to get sellers to pay for closing costs than it has been in the past, as you well know.
Yeah.
And then the other part of that is you've got money that you need to pay for your inspections, depending on what inspections you choose to have done. Home inspection is always strongly suggested, but if you purchase a home that has a well or a septic, or maybe close to the mountains or on the water, you may need a radon test. So those items can be costly as well. So typically you want to prepare for at least 3.5% for a down payment, 2 months of your principal and interest and taxes and insurance for reserves. If you've got that much money in the bank to start the process, then you should be fine. There are some programs out there that offer 100% financing, but you still want to make sure that you've got funds in the bank. Especially now, the banks are really looking at that 2 months, sometimes 4 months reserves, depending on the credit score of the client.
Gotcha. And so if they are getting gift money from family, do you recommend that they go ahead and get that in their bank account before starting the process?
If they are getting a gift, you definitely want to get the money put into your bank at least 60 days before you start shopping for a home.
Okay.
Any money that's deposited into your bank account, whether it be cash, gift, or money that can't really be sourced, and what I mean by sourced is that you've basically got a paycheck or a check that shows where the funds came from, it has to season in your bank account for 60 days.
Gotcha.
So the best way to do a gift is to allow that person to wire the funds directly to the attorney. And then that way, if it's a conventional loan, I don't even have to see their bank statements at all. If it's an FHA, USDA loan, then they're going to ask that I get at least a 1-day statement from the donor showing that they have provided, that those funds are within their bank account.
Yeah.
What you don't want to do is have money transferring from account to account to account. That just creates more paperwork that a client would have to provide. A lot of times parents, grandparents are not real thrilled about sharing their bank statements with us. So that is why the wire to the attorney makes it a lot easier. It's not quite as intrusive.
Now, in that kind of situation, so they would just, you guys would be okay with them wiring a certain portion, like their gift money, if it was like $5,000, and then if closing costs were a little bit more than that, then the purchaser would just have to come up with the rest, and you guys would be fine with that.
Actually, when it comes to a gift, depending on a credit score, if your score is basically below a 640 or 620, they're going to require that the down payment come from you.
Okay.
And they want to see the 2 months reserves. Anything over that, you can have your entire down payment and all of your closing costs gifted. Just know that that gift has to come from a family member. Sometimes employers are allowed to give gifts. And there have been instances where, lifetime friends or what have you, if you can show that there's a very personal relationship, then yes, they can gift as well. You just have to document it a little bit more extensively. But typically gifts needs to come from family members, or it can actually be gifts of equity. There are times when children may buy homes from their parents, and the parents may have quite a bit of equity in there. They can actually gift that equity for down payment as well.
Gotcha. Okay. Very cool. So talk to us a little bit about if a client has a lower credit score, what are some top tricks that you would give somebody to get on the right path to be able to get approved for a loan?
Well, one of the great things that I love about our new system is we can do a soft pull from all 3 bureaus without it actually being a hard inquiry. So if I pull your credit and I look to see that your credit may not be exactly where it needs to be, then I will move over into our credit analyzing system and run what if scenarios, look and see what it's going to take to get your credit to where it needs to be. What I'm really noticing now is a lot of folks have installment loans, like car payments, maybe personal loans, things like that, but they don't have any revolving credit. That is having a huge effect on credit reports right now. Finding that if there is no revolving credit, it's actually affecting your score to the negative as opposed to the positive. The other part of that is if you do have revolving debt, you definitely want it's called debt to credit to be less than 35%. And what I mean by that is if you've got $100 credit line, you don't want more than $35 on that line. So you want to keep it at that 35% to keep that score where it needs to be. If it goes over 50% usage, it's going to affect your credit, definitely. Folks with student loans, right now, please be careful about watching when they come out of deferment, things like that, because a lot of times you may not know that they're out of deferment, or there has been a letter delayed or what have you. They're going to hit you with a negative. They're going to show that you paid it late or what have you. That is definitely going to hit your credit. Medical collections, if they're old, don't worry about paying them. Let's look at it first to see what's going to be your best bet. If something is new on your credit, get it paid for immediately, and always ask if they will delete it if it's paid in full, because the deletion will have a positive effect. Typically, paying it down doesn't affect it too much, but it's really going to depend on the age.
Now, in that kind of situation, would it be like, say you bought a new sofa and you financed it? Is that kind of what you're talking about? Like if you go ahead and just pay it off, if they'll go ahead and show it as deleted and then
Yes.
it'll be like a paid off kind of
Yes.
thing? Okay,
Mhm.
cool.
Yeah.
Is there any other tips that you have for anybody that's possibly thinking about buying a home before we wrap up?
Before you do anything, get your credit pulled, get your loan pre-approved, not actually pre-approved, get it conditionally approved.
Hmm.
Go through underwriting, get everything done so that you know when you're ready to make an offer on a home that you're approved, you're good to go, and you can close within 30 days.
Sounds good. And what I'll do is I'll link your information down in the comments and make sure that people have a great way of reaching out to you. And it was great talking to you. I can't wait to talk to you again.
You as well, Michelle. Thanks so much. Have a great day.